All right, let's get into it. Today we're tackling the biggest story in, well, basically everywhere, the absolute tidal wave of money pouring into artificial intelligence. I mean, it feels like every company on the planet is scrambling to get a piece of the pie. But when you cut through all the headlines and the hype, who's actually winning? Is it the flashy AI companies we hear about every day, or is the real money being made somewhere else, somewhere a little deeper? Let's find out.
To really get a sense of the scale here, just look at this number, $3.34 trillion. Let that sink in. That was the peak market value of one single company, NVIDIA. And here's the kicker. They don't even build the AI itself. They build the chips that power it. This isn't just a tech trend. It's a fundamental, seismic shift in the entire global economy.
You know, whenever you see this kind of frenzy, this kind of crazy investor excitement, it's impossible not to think about a ghost from the past, the dot-com bubble. So the question is, are we at the dawn of a truly revolutionary new era that's going to reshape everything? Or are we just riding a massive bubble that's about to pop? That's the core question we are going to unpack today.
So here's how we're going to break it all down. First, we'll look at the new gold rush itself, just the incredible scale of investment. Then we're going to look past the usual suspects, the big tech giants. After that, we'll get to the really interesting part, the unseen engine that's powering this whole boom, the picks and shovels. We'll compare all this to the dot-com era to see if history is really repeating itself. And finally, we'll look at what's coming next and try to build a framework to make sense of it all.
Okay, first up, the new gold rush. Look, to understand what's happening, you really just have to follow the money. And believe me, the numbers are absolutely staggering.
So get this. Global spending on AI is projected to hit an insane $2.5 trillion by 2026. And where's that capital going? It's flowing right to the prospectors in this gold rush, the companies actually developing the AI models. You've got companies like OpenAI and Anthropic seeing their revenues just explode into the billions. This is the digital gold that everyone is chasing right now.
Now, it's really easy to just look at the tech giants, the Magnificent Seven, and assume they're all playing the exact same game. But if you look a little closer, you start to see their strategies are actually splitting apart in some really important ways.
There's this myth going around that all the big tech players are placing the same bets on AI. But the reality is much more interesting. You're seeing a strategic split. On one side, you've got companies like Meta and Google, and they're going all in on the super high risk, but potentially high reward, game of building the next groundbreaking AI model. But then on the other side, you've got Microsoft and Amazon, and they're focusing more on building out the massive infrastructure needed to run all those models, a process that's called inference. This split just goes to show the market isn't one big monolith. It's actually a bunch of very different bets being placed.
And hiding just beneath the surface of these huge revenue numbers, there's this fascinating financial engine we need to talk about. It's called a circular financing loop. It works like this. A giant like Microsoft pumps billions of dollars into a startup like OpenAI. Then OpenAI turns right around and uses a huge chunk of that investment to pay Microsoft for, you guessed it, cloud computing services. Now, on paper, both companies just booked some incredible revenue. It's not fake, but it does raise a really important question. How much of this explosive growth is coming from genuine customer demand versus this kind of closed financial loop?
So if the AI model companies are the prospectors out there digging for gold, who's getting rich selling them the picks and shovels? This, to me, is where the story gets really interesting. It's where we move from the digital world of software to the very real physical world of atoms. The biggest myth about AI is that it's all just code and data floating around in the cloud. But in reality, it is fundamentally a business of atoms. This revolution isn't just happening on our screens. It's being physically built in the real world, and it has very real-world constraints. From the absolutely crushing demand on our power grids to the mind-boggling amounts of water needed for cooling, not to mention the highly specialized construction crews needed to build these data centers.
And the scale of this physical build-out? It's almost hard to wrap your head around. Projections are showing that by 2030, the world will need to spend $6.7 trillion just on data center capacity to keep up with AI. That is a colossal investment in physical stuff.
There's actually a cool economic term for this whole thing. It's called physical capital deepening. And it describes this exact moment we're in, when a new technology forces a gigantic investment in real-world infrastructure. And it's not just one thing. It's this whole three-tiered architecture. You've got the massive cloud data centers for training the models, then smaller on-premise systems for big companies, and then tiny little edge devices for getting instant responses.
In this whole picks and shovels ecosystem, it goes way beyond just the chip makers. You've got power companies scrambling to meet this unprecedented demand for energy. You've got thermal companies like Vertiv and Modine creating these incredibly specialized liquid cooling systems because, get this, air just isn't cold enough anymore. You've got networking companies like Arista building the super-fast fiber optic highways for all this data to travel on. And then you have deployment firms like EMCOR that are physically building and wiring it all together. This is the unseen engine of the AI economy.
Okay, so this level of investment, this much hype, this feeling that we're on the cusp of something massive, it all just feels so familiar, doesn't it? So let's just confront the comparison head on. How much is this really like the dot-com bubble of the late 90s?
This is such a critical reminder from history. A technology can be genuinely world-changing and still lead to a catastrophic market collapse. The internet changed everything, we all know that. But it didn't do it before wiping out thousands of companies and literally trillions of dollars in investor wealth. The lesson here is that a new paradigm like this creates widespread creative destruction, where only a handful of true winners emerge from the rubble.
And look, this parallel isn't just a feeling, it's right there in the data. Private investment in IT as a share of the entire economy is right back at the same peak level we saw in 1999. By that measure, the investment frenzy today is every bit as intense as it was at the absolute height of the dot-com bubble. So the billion-dollar question, or trillion-dollar, I guess, is this time different. Let's break it down. On the one hand, the reasons for concern are obvious. Valuations are sky high, the market is incredibly concentrated with just a few huge companies, and, the hype sometimes seems to be way out ahead of the actual profits. But on the other hand, there are key differences. Unlike the dot-com startups that had no revenue, today's tech giants have massive real-world earnings. The technology is more mature, and there's a much clearer path for how AI is actually going to make money.
Okay, so where does all this investment, all this infrastructure building actually lead? If we look beyond the chatbots of today, the real utility of AI is evolving into two incredibly powerful and very different domains.
The first frontier is something called agentic AI, and this is the leap from AI being a tool that you use to AI becoming an autonomous worker that you delegate tasks to. Think of systems like Devon, which can take a software project goal and just execute the whole thing on its own, or Harvey, which can do complex legal research and draft documents. This is about AI performing complex, multi-step workflows, which is a total game changer for productivity.
And the second major frontier is physical AI. This is where that intelligence escapes the cloud and gets a body, entering the world of atoms. It's about putting advanced AI directly into robots to completely revolutionize physical industries, manufacturing, logistics, construction, you name it. A huge signal here is SoftBank's massive investment in a robotics division, with the explicit goal of fusing AI with industrial robots. This is how AI literally steps off the screen and onto the factory floor.
All right, that was a lot. We've covered the frenzy, the infrastructure, the history, the future. So how can we tie this all together? How do we build a coherent framework to actually make sense of this AI gold rush?
Okay, here's a way to think about it. First, look for the picks and shovels, not just the digital gold. The really durable, long-term opportunities might be in that essential physical infrastructure. And that means focusing on the bottlenecks, the absolute must-haves that AI can't function without, like power, cooling, and networking. Second, always remember that revolutionary tech causes creative destruction. There'll be a few enormous winners and thousands of losers. The key is being able to distinguish between the digital hype around the AI models and the atomic reality of the infrastructure build-out. And finally, keep your eyes on the horizon, where autonomous agents and physical AI are going to define that next big wave.
And I want to leave you with a really practical mental model. It's a test from Warren Buffett. If you want to find the true long-term winner in any part of this AI ecosystem, whether it's the models, the chips, or the cooling systems, just ask the competitors in that space which single rival they wish they could just eliminate. The company that everybody else is afraid of, that's almost always the one with the real, durable advantage.
So, we end right back where we started. We are living through a time of just incredible technological promise and equally incredible financial risk. The internet revolution gave us giants like Google and Amazon, but only after thousands of other companies completely vanished. The AI gold rush will be no different. The question is, when all the dust settles this time, who's going to be left standing?